big news, big macro factors that has been weighing down the markets is this spike up in crude oil prices. Brent crude that is sitting pretty above the $81 per barrel mark. Now, crude sensitive stocks like HPCL, BPCL, IOC all have slumped in trade as Brent oil prices have surged past $81 per barrel. My colleague Varun is joining us with why the rally has happened overnight and the impact of the same on the Indian markets. Take it away, Varun.
Well, so there are two reasons because of which crude oil is rallying and now it is about the $80. First of the reason is the weather condition, because normally you see in this season normally the demand for crude oil and natural gas goes up, and that's one reason. And the other major reason is the geopolitical tension. There are concerns over US sanctions on Russia, and that's actually fueling the price of crude oil, because of which in last 1 week crude oil is up by around 6.3%. There are several impacts of crude oil on stocks, on sectors, but also on the economy, because every $10 increase in crude oil prices actually impacts India's current account deficit by around 0.55% and consumer price index by around 0.3%. It also impacts the forex reserves and rupee. When it comes to sector, it has a big impact on oil marketing companies, because if crude oil goes up, their marketing margins actually get a hit. For every 50 paise per litre change in fuel margin, there is a EBITDA change of around 7 to 11% for the oil marketing companies. Also, it is negative for paints, aviation, tires, cement companies, because around 40 to 50% of their raw material cost is directly or indirectly linked to crude oil prices. But yes, it is positive for the oil exploration companies like ONGC, Oil India, Vedanta, HOEC, because they do the oil exploration, and for them it is actually beneficiary if the crude oil prices go up. But yes, for majority of the sectors and India as an economy, crude oil prices going up is surely a negative.